thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis. Sometimes it can come from the headline news or economic calendar or combination or geopolitical. But sometimes it gets a little bit more confusing when good news is now bad news and vice versa. So if sometimes the market sentiment just changes out there and it gets a little confusing. So we try to get into the explanation as to why the market sentiment changed and hopefully give you the information you need while you're looking to refinance or purchase as you're probably following rates, or maybe you're just in the industry just kind of following along what's going on with the market and want to get to know the news. So hopefully these videos will give you the information you're looking for. If you guys, a little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. Love to be able to help you out with any of your loans if you have anything regards to refinance or purchases. But more than that, we like to be a resource. So if you guys got questions about anything, whether real estate related, we'd be more than happy to answer any questions you may have. In the meantime, we'll start off with the economic data today. We do got a couple items here. And we'll start off with the Philly Fed, which is the manufacturing region in the Philadelphia, or manufacturing sector of the Philadelphia region. So this is for the month of April. So March came in at 27.4. Forecast is supposed to be a dip down to 21, and it dropped way down to 17.6. It's still a decent number, but far off. Obviously, that's a pretty steep decline right there. So we'll definitely keep an eye on this, see if this is something that will continue. But I mean, it's still a decent number. However, it was a pretty sharp decline. So again, we'll take a look at that. Jobless claims. Last week's report came out at 185,000 initially, but it got revised slightly higher to 186,000. Forecast for this week was gone for 180,000. It came in a bit shy of that to 184,000. So this means that 184,000 people last week applied for first-time benefits with unemployment. And then, of course, if you just kind of glance here at the continuing claims, we do see a reduction of that. So we're seeing fewer people continuing with their claims on unemployment here. Last but not least, we do got the leading index indicator. So this is something that kind of helps gauge like where the economy is moving over the next 6 months. The last for the month of February was actually revised. It initially came in at 0.3%, but jumped up to 0.6%. Forecast called for 0.3%. It came in at 0.3% for the month of March here. So overall, economy is looking pretty decent here. Of course, the main thing is what's on the topic today for headline news is the Fed officials. We have a few Fed members speaking. We had Mary Daly speak, and basically she had some bullet points talking about how she might even be in favor of a 3/4 of a point rate hike, but she wants to get their basically front load. It seems like that might be the talk right now of fighting inflation, that the Fed may front load, meaning try to get to the 2.5% neutral rate sooner than later, and that might be including increasing the increments of the Fed rate hikes. And right now it looks like it'll be 0.5 point, but after that I think you might see that potentially it could be even raised higher than that to maybe the 3/4 point that they're talking about. So it was also alluded to that after this next meeting, which is in about 2 weeks, we'll have that probably 0.5 point announcement, but also talking about the balance reduction here, not trade balance, but the balance sheet reduction here, and of course that will adversely affect mortgage rates. Maybe priced in. We've had quite a bit of talk about that, so, and we've had some negative reaction in the bond market, so it may be priced into the pricing right now, but I guess we'll have to wait and see when that happens to see for sure. But for the most part, and then of course today we also had Jerome Powell speaking on a panel with his counterpart with the ECB, Christine Lagarde. He wouldn't allude exactly what his policies were, but meeting, but it did strongly hint that there will probably be 0.5 point coming in, and want to try to get front loaded and get closer to neutral, coming in much quicker than much quicker than we would normally do in increments of 0.25%, just due to the high inflation and trying to get that under control. Now, also we got investors looking at corporate earnings reports. We've had a lot of course, mixed reports. We've had some good ones, bad ones. Of course, yesterday Netflix hugely disappointed, but today we got Tesla came in after hours, which came in much better, and so they're kind of the saving grace. But however, the stock market is in decline today. It's on the red, uh, much like our mortgage-backed securities here. If you take a look here, um, just right now we just don't have any buyers for mortgage-backed securities with high inflation and everything. We got a difference between people who are trying to sell bonds, and we got people who are difference between who are offering and they want discounts. So right now it's just we're at influx, so there's no liquidity in the markets at this point, and we're seeing some huge fluctuations here. So this is kind of what I've been kind of warning the last week or two regards to these head fakes. Don't get too excited about these um, hard good big fluctuations where we get positive, because we'll get like a day or two where it's good positive, and then the next day we'll get a huge decline like we did there. And then same thing for today. Yesterday we closed up 45 basis points. Now we're down 66 basis points. So again, we still don't know where that bottom is yet. We're still trying to search for that and trying to see if we can hopefully get some bounce upwards. But in the meantime, mortgage rates are in that trajectory of going lower. Our mortgage rates are on the trajectory going rising, where mortgage-backed securities are going lower, which means the rates go higher. So right now we're down 66 basis points, and we're even down even much further, even much as like around 3/4 of a point. And a lot of this again is time to some of these points are made with Daly and Powell, and then we've had again once they open up the mortgage-backed securities with the trading, we just don't got a lot of buyers coming in and trying to buy. We've lost some foreign support. Japan was a pretty big buyer, and they are actually just at this point they're buying more of their own bonds at this time versus having much of an appetite of our own here. So unfortunately, we're losing a lot of support from investors in this regards here. And if you look at the treasuries, this has also been spiking. This is up higher as well. This is, as you can see here, the high was at 2.954 at 2.95. Right now we're down to about, we'll just round up to 2.91 here at the 10-year treasury here. All right, so last but not least, we'll touch on what's the average rate for a conforming loan limit. The 30-year is at 5.27, and the 15-year is at 4.52. Oh, I think that's 4.52. Yeah, 5.27 for 30-year fix, and let's take a look again. 4.62, excuse me, I misread that. 4.62% for the 15-year. So as you can see, rates continue to rise here. Now, if you guys are looking to get a rate quote, we're here to help. We can certainly provide that for you guys. I do see, again, that's just an average, but I do see certain products getting better pricing than what we're seeing the average here. So again, love to be able to help you guys out. In the meantime, if you guys like these videos, please help us out and smash that like button, share, and subscribe. We greatly appreciate folks taking the time to watch, and I hope you guys have a great rest of your day. We'll see you guys in tomorrow's video. Bye-bye.